Hey, good morning, everybody. It is Friday, June 26th, 2026. Thank you for joining me. Remember, I am Hammer, founder of Hammer Solutions, home of great products such as Originator, Success, Grab and Go Social, and Rate Sensei. Great products to help my Originator friends get more business from Google AI search and social media. Be sure to check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time. If you are watching on the replay, let us know that you're on the replay. Today's lock advice: I'd consider locking most loans that are closing in July, floating the rest. So stick around. I'll tell you why I believe that in a minute. So remember, when if you want a reminder to join me live, you can sign up for a reminder at hmmr.io/reminder or use this cool QR code. If you're on your phone right now, take a screenshot, go back to your photos, press and hold it. It'll bring up the link and you can sign up to get reminded that I'm going live. You also may want to consider signing up to receive our daily lock advice email at www.ratelockadvice.com. Let me give you an example of what that looks like here. Bear with me. I've been doing this lately, so let me pop that up for you. So here you go. A little example of what that looks like. You can go ahead and see a quick overview of what we've got going on, a recap of yesterday, the rate outlook for today, the outlook over the next 15 days, 15 to 30 and 30 plus, along with lock advice, and then the technicals. So I may actually come back to this and reference this today. There's a little bit more, so we'll keep an eye on that. But remember, make sure you go ahead and sign up for that. Also, don't forget, sign up for our text alerts at www.ratetextalerts.com. Protect your pipeline. You don't have to spend a lot of money. A lot of these services, I remember when Rate Alert was, what was it, like $30 a month, $25 a month, and now they've gotten so expensive. So anyway, so great to have you here. If you're here this morning, say good morning. If you're watching the replay, don't forget, give me #replay in the comments. Michael Garcia and Michelle Shoemaker, good morning. Rob Wilson, Yasmin Martin, Patrick Campbell, Jerry Simmons, good to have you here. Mallory Fotiadis, great to have you here, my friend. Mike Tebow, Pat Tenney, good to have you here. Ron Siegel says it's National Chocolate Pudding Day. Don't forget the whipped cream. Remember pudding pops? Again, we won't go down the rabbit hole of Bill Cosby, but Bill Cosby, the what do you call that? The spokesperson for pudding pops. Pudding pops were awesome. I'm a big chocolate pudding guy. I like chocolate pudding. I always wonder though, when you go to a restaurant with a salad bar, why do they have chocolate pudding in the salad bar? It's always weird to have the dessert things on the salad bar like that. Also, have a question of the day for you today. What are your plans for the weekend? Let me know. If you stick around, I'll show you my plans for the weekend as well. But let me know your plans for the weekend. It is Friday, TGIF, baby. Also, feel free to tell me what's your favorite pudding flavor, if you like chocolate pudding, anything like that, because we love your comments. So with all that said, I'm going to go ahead and let's get to the good part here. Let me close this. And all right, let's go ahead and let's get started. First things first, we'll go to the technicals. Let me bring up that screen. So looking at the technicals this morning, basically we're flat. We've been up a basis point or two, down a basis point or two. It's basically flat on the day. This 10-year treasury yield, 4.39. This is exactly where we ended the day on Wednesday. It's where we've ended the day on Thursday. And it looks like it could be a kind of a resistance level here, even though there's not necessarily a history to form that as a resistance level. It looks like that's kind of the line in the sand that traders may be pointing out for. So quick recap of what happened yesterday. We saw early improvement in bonds. You can see that here before pricing came out. Pricing came out around 10 a.m. And as we ended the day, they were down just a couple of basis points, but really not much of a change at all. As far as where rate sheets today goes, we're right there. We're right at that 100.55-ish mark. You're going to see rate sheets very much in line with what we saw yesterday. Arguably Friday, you could see them a little more conservative, but generally this is what we were ended at yesterday's where we're at yesterday. Very likely what we're going to be seeing today. Reprice risk on the day is low. The only thing we've got as far as economic data, we've got the consumer sentiment data. I think it is consumer sentiment data. Let me double check. Coming out at 10 a.m. It's enough that it could, if it comes out, let's see, this week. Yeah, consumer sentiment data right here. So depending on how it comes out, we could see a little bit of give back again. We're not likely to see things move too much from here. As far as that reprice risk goes, we could see a little bit of drifting. You generally will see on a Friday in the summer. Just keep that in mind that lower trading volumes, traders disappear for the long weekend. We could see a little bit of drifting lower, but generally lenders not too quick to reprice on that. So shouldn't have to worry too much about that. As far as lock advice, I'd consider locking most loans. Why am I considering locking? Let's kind of go into that. So here's the thing. I want to show you yesterday, we ended the day at 100.55 with bonds, right? Let me zoom in on this so you can kind of see this as closely as we can get it for you. So 100.55. And what I want to show you is with the dotted line, there we go. Okay. This is the dotted line is on 100.55. And if we draw a line at 100.55, let me do a arrow so that we can get a pretty decent line here at 100.55. It's going to be right about, oh, it didn't do an arrow. That's all right. Yeah, we'll do the arrow. Hold on a minute. There we go. 100.55 is going to be right about here. Can I bring that down? Can I pull that back down? No, I can't. All right, hold on. That sucked. Let me do it this way so I can get a better. There you are. Okay, so as we're at 100.55, what I want to catch your attention on is this day. It's up a hair, right? Let me draw it one more time so I can get it right on there. There we go. Okay. So, sorry, took me a little while there. I wanted to show you here, and then here. 100.55 has been, and even all the way back to here, and arguably here. It's definitely something going on here, right? So we see right here the wick, the long end of the candlestick, the high end. Bonds hit that level, but couldn't hold and fell and closed the day here. Here, same thing. They came up, tested 100.55, fell and ended the day here. Right here, they tested 100.55, ended the day here. And the kind of that 50-day moving average was holding up right here. Now, over here, yesterday, we ended at, you guessed it, 100.55 after being much higher, 100.64, but ended at 100.55. This morning started a little bit higher, dropped down to 100.55. At the moment, it's up a few basis points more than that. I wouldn't get too excited about that, though. I'll bet you that we end the day at or below 100.55 today. I don't think that bonds will end the day above that number. I think there's something significant going on there. And if we move over to the 10-year, let me refresh this so I can scroll it over here. If we look at the 10-year, that 4.39 is where we ended the day on Wednesday. It's where we've ended the day on Thursday. It's where we're at right now. Now, we are still below this 50-day moving average, this red line. This is a big deal here, right? Because for here, all of this, remember this red line, you can see it the whole time. Bonds have been above that 50-day moving average for quite a while, a few months. And for the first time let's go back 6 months, for the first time since March over here, we're below that 50-day moving average. But even then, when we were hitting our best levels, which was February 27th, we ended up getting pushed right back above the 50-day moving average. But this was due to the Iran conflict and what was going on in Iran. So that's a bit of a concern there, that we're going to bounce back above that 50-day moving average. But at the end of the day, where I'm really kind of going with all this is that when we look at pricing, rate sheet pricing, I think that we're at the best level that we've seen in a month. 6.53. The best we were before that was 6.54. So it's just a monkey hair better. But when you look back here, 6.52 was May 14th, so 6 weeks ago. But we're not likely to get back even to these April lows. I think this 6.5 mark is kind of our line in the sand here. I think this is the best level we're going to see rates at for as long as markets are pricing in expectations of Fed rate hikes. Again, not cuts, Fed rate hikes. And the next week, we've got labor market data. We're going to have a lot going on next week. So next week, we've got the on Monday, there's not anything going on. So Monday is quiet for economic data. Tuesday, we're going to have, I believe we'd have ADP weekly. I don't know that we may not. I don't know if they don't do it the same when they do the main report on Wednesday, because I didn't see it on the economic calendar. But whether we have that or not, it's JOLTS that I would be paying attention to on Tuesday. So Tuesday, we're going to have JOLTS. That is the last day of June on the 30th. Then July 1st, we have the ADP data. And then on Thursday is the big report. Thursday, we're going to get the BLS jobs data. You're going to get jobless claims at the same time, in the morning. And then markets close Thursday at 2 p.m. So we're going to see a market reaction to that labor market data first thing in the morning on Thursday. And then it's going to be a ghost town. And then markets are closed at 2 p.m. and they're closed Friday for observation of, the July 4th weekend, even because July 4th is on a Saturday. So, can't not have a day off of work. So it'll be July 3rd. So markets are closed July 3rd. They close early July 2nd. It's going to be a bit of a tumultuous week next week, a hectic week. The idea is if you've got something closed in the first half of July, remember at the Fed meeting with Kevin Warsh, he focused on inflation and didn't even mention the labor market. How weak would labor market data have to come in order to ease the expectation of a Fed rate hike? That's the only thing that's really going to help us, right? So I don't think that could even remotely happen. I don't think that, but again, we get surprised with data all the time, but there's nothing indicating that we're in a weak labor market. There's nothing indicating that we're going to get that kind of a report. Yeah, Ron, you're pointing out for the other side too. Let me pull that up. Ron's pointing out for, trading. He's pointing out that Tuesday is what's called triple witching, which is the end of the month, the end of the end of the month, the end of the quarter, as well. And then what's the third part on that? I forgot what the third thing is. So anyway, Tuesday is going to be, you've got a lot of opportunity for volatility. You can see some moving around. But I don't think any of it is really all that advantageous for us as far as loan pricing goes. I think we're kind of flirting with the better end of the range. Now, rates are not going to move much. That's the reality. We're at a very stable, rate window, if you will. Let me pull up the Mortgage News Daily piece again, and I'll show it to you one more time, and we'll kind of go over it. I mean, when you look at it, the reality is, look at these numbers. In the last month, the high is like 6.68. Did we go to 6.75 here? No. So we went to 6.75 a while back, but 6.68 is the high point. 6.53 is the low point. I mean, we're within an eighth of a point in rate, not in pricing, but in rate this whole month. And during that time, it spends a lot of that time at the kind of in that higher end. So even if we are back at around 6.5, this 6.5, this is our kind of where rates are at right now. And of course, govies are going to be, generally about 3/8 of a point, maybe even a half a point better than what you see on your conventional conforming. But conventional conforming, 6.5 is kind of where we are at, and oil prices are back to within a few dollars of where they were before the whole Iran conflict. So it's not like we're going to see continued drop in oil prices. Brent crude this morning, what is it currently at? It's at 72.68. In February 27th, when we saw the best rate sheet pricing that we had seen in years, February 27th, it closed at 72.48. So we are right at the same area that we were at when pricing was at its best. Earlier in February, you were in the high 60s for Brent crude. So it's within a few dollars. That's it. There was a headline, by the way, yesterday that Iran attacked a cargo ship. I seen something say that it was Taiwanese. The other ones say it was Singapore flagged. I think it was Singapore report flagged. They attacked the ship because it didn't go through the area of the strait that they told it to. So there's definitely still some stuff going on there, and they're going to push the envelope and see what they can get away with. But markets didn't really look too worried about it. Neither did anybody else. Oil prices went up a little bit yesterday afternoon when it happened, but fell back down. So, and it was there's only a little bit. So, not much to worry about with that. I mean, so at the end of the day, when it comes to the lock advice, I'm it may prove to be conservative, but I don't want to float into next week's jobs data. You've got the JOLTS data on Tuesday, you've got the triple witching, you've got, Thursday is going to be a reaction to the BLS jobs data, and then it's gonna kind of be what it's gonna be, and it'll probably die off for the afternoon. So, um, you know, most loans, I just think it's time to lock them up and be happy with what we've got. Pigs get fat, hogs get slaughtered. So that's the old adage. Keep that in mind. So that's it for me, my friends. Let's go ahead and let's see what you guys have planned for the weekend. Let me know your plans for the weekend. What are you guys doing this weekend? I don't see options expiration is the witching is the third thing. Thank you. I am not a stock guy. So morning, Segaloff. Of course you missed everything good, man. It's pudding day. We were talking about the fact that that it is pudding pops. We're awesome. So what are your plans for the weekend? I'm gonna rub my awesome life in your face and show you my plans for the weekend real quick. I am leaving this afternoon with my wife. We are going to go to this Airbnb with the Moon Gate, as they've call it, which is this thing here. I'm a little disappointed because we were going to take the motorcycle. It would have been a nice 2.5-hour ride, and that would have been a nice ride for us. However, unfortunately, the weather's going to suck this weekend. Thunderstorms, possible hail, wind, just not nice riding weather. And we ride to enjoy it. So I don't mind riding in the rain as part of a longer trip, but for a weekend, it just doesn't make a lot of sense. So, but this Airbnb. They call it a tree house. It's up on stilts, really. It's a cool little place. But what makes this something that my wife really, really likes? There's nice outdoor kitchen, covered Blackstone. That's nice. So I'm liking that, digging that. And but you can see them over here. Here it is. So these little you can't see it. Let me slide the picture over. There you go. See these bathtubs? This is the whole big thing. My wife was loving this. The fact that there is 2 outdoor bathtubs that are. Oops. Hold on a minute. I lost the pictures. There it is. Yeah. So there's 2 outdoor bathtubs. So that'll be a thing. Hey, it is what it is. I love her. She loves this. So therefore, I love this. But we'll have fun. You guys know I do love to go away at least once a month with the love of my life. So that's what I got going on. What are you guys doing? Outdoor kitchen in the hail? Sure, it's covered, man. It's covered. We could do it. Preparing a trip together, me and a tractor for a trip together. Me. Cool. What kind of tractor? So nobody else said what they're doing this weekend. Y'all are being lazy. There's 32 of you on. Nobody wants to say. You guys are all busy. You're listening, but you're not participating. You got to participate. So Siegel's got it right, baby. Happy wife, happy life. There is no truer words. So, but let me know your plans for the weekend. I'll throw the lock advice back up on the screen, and then I'm going to wrap it up in a minute. So let's see. I'd consider locking most. Again, it might be proved to be conservative. I just don't see a lot of room for improvement here. James Mahan, date night with the wife. Good for you. Oh, you're going to get your tractor? What kind of tractor are you getting? You getting a John Deere, Kubota, Mahindra, New Holland? What kind? I've got a Kubota. I got a Kubota 3301 is my Kubota. So wife's birthday, whatever she wants. Good man, Carmen. Good man. And happy birthday to your wife. So 39 years and counting. Siegel. Yeah, I'm just coming up on, we have 29 in the bank. When will we? Yeah, this will be 29. So I'm 10 years behind you. And I look 20 years younger. Let's see what else you got. So Oh, this is my hat band is off. There we go. Put it back in the right spot. All right, my friends. Thanks again for joining me. I'll see you next week. Oh, an old Yanmar. Oh, nice. That's an old one. So, well, very good. Segeloff, take a nap. Dude, get out there and get physical. Finishing up Mastermind in Las Vegas. Well, very good, Mark. I hope that went well for you, and I hope you had a good time. So, all right, everybody, I'm going to wrap it up. I hope you guys have a fantastic weekend. I'll see you on Monday. Take care, everybody. Bye-bye.